Hey, everybody. Welcome to the Retire Young podcast. And this is the podcast we talk about a number of different topics. We talk about sports. We talk about especially the financial markets. And today I got a special guest with me. I bring a lot of guests on the show. And today, I'm going to like this show today. I got Greg Hadley on the show today. Greg, how you doing today?
Great, Josh. How are you doing?
I'm doing fantastic. Before we get into some of the different topics I want to talk about today, I just wanted to have you kind of recap what's happening in these financial markets right now. We've had a lot of volatility in the past. It's slowing down a little bit, but the market keeps chugging along. That whole buy and hope strategy is actually working right now. So just kind of recap what's happening in these financial markets and just some of the opportunities that you're seeing right now.
Well, what's kind of fun is, we all realized what happened. The market had that huge sell-off, and we've never willingly killed an economy, but the reason they did it actually made sense at the time. So now we're reopening. And what's interesting is that, you look at a lot of tactically managed funds, and what they do is they look at it on a monthly, they look at their RSIs and all that. And, of course, we know that that's a fool's errand, but let them do what they want to do.
There you go.
And so what happened to a lot of these funds is, because the sell-off started in early March, a lot of them got knocked down in late March because when their RSIs started to turn.
It's lagging.
Yeah. Because it's a lagging indicator, absolutely. And so the problem, now they're getting back in, which is driving the markets higher. And so what's interesting is, you look at that and say, can you manage your money a little bit better? Should you be hedged? Should you be looking at these things? And obviously the answer is yes. So what we're seeing now is we're seeing the tail end of that. We're no longer seeing these 10% moves a day, which is, that you see that kind of movement on the height of crashes.
Yeah, fear. When there's a lot of fear in the market.
Fear and greed. Now it was fear. Now it's greed.
Yeah.
Now we're afraid. Before we were afraid of getting crushed. Now we're afraid of losing out.
That's that FOMO.
Oh, absolutely.
Do you think the Fed is propping this up a little bit?
Oh, absolutely. People are, all you hear now is there's a Fed put. In other words, the Fed will always step in. We're almost back at all-time highs, and there's such a disconnect between the stock market and the economy. Now, the stock market does look 6 months ahead. Are we, to me, a little bit over? Yeah, a lot of times you'll see is all-time highs are kind of like a carrot to the horse. You know what I mean? You have to go get to all-time highs, and then we usually pull back. We saw the NASDAQ hit all-time highs. I mean, the S&P is just right at the all-time highs. The Russell right now has been a lagging indicator. But, so it's interesting is that, so for us to pull back, let's say 10 to 15% actually would be very healthy. I'm a big fan of the SPDR because it's an ETF. It's very easy to trade. You can trade it in your cash accounts. It's very optionable. It's a wonderful instrument. It's also the blue of the blues. You know what I mean? The S&P is great. And if the S&P pulls back into that, the SPDR 285 area, 290 area, that's down about 10%. I think that's very healthy for the market. I think that's a great area to pull back and then push higher. It seems like we had to go make all-time highs. We're pretty much doing that, and then
back there.
Yeah, you're right. And then you expect to see that pullback. So I think the markets are interesting now. And again, we're not seeing these huge 10% moves anymore. Those daily ranges are coming down to 2 to 3%, which
is still more. It's still more than what it was.
And it's still crazy high.
Yeah.
But it's not the way it was. So it shows people are starting to relax a little bit more, and we're starting to get more opportunities to trade this thing, buy and sell.
Yeah, with the country really starting to go back to work and stuff like that, and I'm seeing it right now. Office buildings are still empty, even though people are starting to come back to work. So let's talk a little bit about real estate and or commercial real estate, but also I want to first have you explain real estate investment trusts, or REITs.
Absolutely.
So what are those first, and then talk about some different strategies that investors will use for that.
Well, the fun thing about REITs is it allows people to invest in real estate investment trust. It allows you to invest in the real estate sector without actually having to buy real estate and manage real estate. And then, so that was the whole idea of the REIT. And the fun part about the REIT is there's all different types of REITs. You have apartment buildings, you have office buildings, you have this, you have that, you have commercial, different types of commercial. And so what's interesting is, and then they have the REIT that does everything. So it's kind of fun is from an investor's point of view, you can look at this and say, all right, how do I want to take it? How do I want exposure to that market? Basically, it's kind of like a bond fund. You know what I mean? They're not too crazy as far as price swings.
Okay.
But it's more of a way to get some interest rate because they're so tied to interest rates. When interest rates go up, it's harder to keep the buildings anyway. So what's kind of interesting now is we're all working from home.
Yeah.
You and I both have worked from home, and
It's a lot easier that way.
Oh, it's a lot easier. I
Yeah.
tell you, your commute between your bedroom, the kitchen, and your office is a lot smaller.
It is. You see, you tend to add a little more weight though, because you're in the kitchen half the time
Oh, boy, tell me
on the
about it.
headphones and doing different meetings and stuff like that.
Absolutely. No, that's one problem is you hear your refrigerator calling a lot more.
Yeah.
Because you can go see what it wants.
Yeah.
And so the thing I find interesting is so many of us more are working from home. And anecdotally, my brother-in-law works he works with a software company, owns a software company, and they do computer security. And so they log into your systems and they make sure everything's clean. And they have 60 folks that are at a help desk. And so he has a large footprint in office space in the southwest Chicago suburbs. And he said with everyone working from home, they're actually more efficient. And he says, the employees like it because they're not driving an hour a day each way.
Yeah. Plus, I'm hearing as well that they're working more hours as well.
Yeah, because you can't.
Yeah.
Your commute time there is no commute time. And so they're more efficient, they're happier. And he's saying that the next time the property comes up, he goes, I could cut my office space back by 2/3.
Sure.
And still be efficient. And so I think they're not the only ones looking that way. I know banks are looking that way. And so anecdotally, I think when we come back to the real estate investment trust, I think there's going to be pressure on these things. You know what I mean? So what's kind of interesting, how do you take advantage of it? Well, if they're optionable, obviously you could buy puts on it, you could do different things. But overall, I think going forward, I think there will be changes to our society as an investor as well. Because we're not going to need these huge office space that we need now.
Do you have any specific REITs that you've looked at recently at all? Or?
No, not really. I mean, because I was just talking to my brother-in-law before I came up. I don't really do a lot of investing in REITs, but I do find it interesting that this area is being talked about. In fact, I saw an article in Bloomberg a couple of weeks ago, and they were saying that very thing, that there will be pressure. Yeah, so it's kind of cool. And then I talked to my brother-in-law, so it's neat. I always like when you read something and then you get anecdotal evidence of what they're saying.
Yeah.
Because usually sometimes the press is, you wonder what they're thinking. But so
or what their motive is too.
Yeah, what the motive is, absolutely. So I always love confirmation of things, and that's a great confirmation.
Got it. Now, do you have any, you do a lot of options. You trade options in longer term and shorter term. Is there anything specific you're looking at, any certain sector?
Well, what's kind of fun is, sectors come and go. Like everything else, there's rotation. And we talked about the SPDR. And the SPDR is a great way for folks to get, exposure to the S&P 500. Now, normally that's a futures contract, and the SPY as an ETF allows people to trade that in their cash accounts. And so what's nice is you can cash account and some retirement accounts. And what makes it fun is it's very optionable. In other words, half of all option volume goes through SPY. So it's the big one in the room. And so what's kind of fun with SPY is it's very optionable. You can do things like call spreads. You can do, if you're bullish, you can do put spreads if you're bearish. In other words, there's a lot of ways to get exposure from anywhere from very short-term trading, if you want to do something more on a day, all the way out to you could go out a year.
Yeah, and just so the listeners understand that bullish means participating in an up market.
Correct.
And bearish means participating in a down market.
Absolutely. And so what's nice is I think people are starting to realize after these last big swings that you have to protect yourself. You know what I mean? You have insurance on everything. None of us would drive without insurance on our cars.
Homes.
Homes, our health. There's pet insurance. You know what I mean? And so the idea that we do not insure our nest eggs for our future is crazy.
Yeah.
You know what I mean? And so what I like is people are starting to understand that it's like wearing a seatbelt. You have to have it.
Yeah.
And that's where options are coming in, and options are the fastest growing instrument right now because of that reason. Because you can participate with the upside, and yet you can protect yourself to the downside.
Yeah, with a lot of people at home right now, there's some certain stocks out there. We were talking a little bit earlier about some stocks you've been looking at as far as they're a little more optionable now.
Absolutely.
So let's talk about that. I know it's a little dicey subject, but I think we can do that here
Right.
today.
I think we can. And again,
We're not in California, though.
No, we're not in California. And, in Chicago, Cook County, they've legalized marijuana. And so we can kind of segue into that.
There you go.
I like to call it the weed stocks.
Okay.
We're at home a lot more. And I'm not saying anecdotally, I don't know why these stocks have picked up in popularity, but they certainly have. The three stocks, the three main marijuana stocks are CGC, Telluride, TLRY,
Yep.
and CRON. And, you look at, they're all down on the lows like everybody else. But what's interesting is when you go look at the options, what we want to look at is we want to see that there's a lot of volume. I want to see that there's open interest. I want to see that people are trading this, especially institutions. I want to see large volume. And you're starting to see that now with these three stocks. And what's funny was 6 months ago, they were not optionable. The bid ask, in other words, how much you had to spend to get in and out of the trade was way too high. I always called it, these were the Roach Motels of trading. It was very easy to get in, very hard to get out. And what's interesting is how much they have changed. They've become very optionable.
Okay.
And in other words, you can start trading these stocks, and they're very tradable. You get good moves in them.
Yeah. And essentially, you can utilize the leverage.
Absolutely.
Buy them at a discount rather than putting up a lot of capital like you typically would to buy the stock.
Absolutely. I mean, you find with options, you have a much higher level of efficiency. We were looking at stuff where your efficiency can be much higher. Now, again, you have to realize you have to be correct on the direction of the trade.
Sure.
Options are not magic pixie fairy dust. You know what I mean? You have to be correct on the direction. But what I love about options is you can make 10 times the return on investment, the ROI. And that's why you look at a lot of institutions, Goldman Sachs, Citibank, they hold a lot of options because you get that higher level. You still have to be right on direction.
Sure.
But you are able to manage your risk so much better, and you get that much higher ROI. And I believe people are starting to understand that now, and they're starting to follow the institutions, and the institutions use them a lot more. So what's interesting is, and these are smaller level stocks. I mean, they're cheaper stocks, $7, $10 stocks.
Yep, this CRON is a 760 right now.
Yeah, 760. So what's interesting is you can go and you can trade these options, and you can go out 3 months. So in other words, there's a lot of different things you can do.